In this next panel discussion, we'll hear from Oki Matsumoto, Chairman and Chief Executive Officer of Monex Group, and Jacqueline Tan, UOB's Managing Director and Head Group Personal Financial Services, on how the consumer and retail financial service sector is staying innovative. Moderating the conversation will be Sandeep Malhotra, Executive Vice President of Products and Innovation Asia Pacific at MasterCard.
Welcome everyone to today's session. I'm Sandeep Malhotra and I lead Products and Innovation for MasterCard in Asia Pacific. I'm pleased to be here today with Oki Matsumoto, Chairman and CEO of the Monex Group, which operates retail online brokerages in Japan, US, China, and Australia. He's currently on the board of MasterCard and is also Vice Chair of Human Rights Watch. Also with me today is Jacqueline Tan. She's the head of Group Personal Financial Services for UOB and leads UOB's consumer banking business in Singapore and across the region. We are here today to discuss this year's Singapore FinTech Festival theme, Web 3.0, and its impact on our virtual and real financial lives. The technology which powers Web 3.0, smarter data analytics, faster networks, more powerful computers, and new ways to exchange data information is expanding the virtual world around us. Its growth has already brought us cryptocurrencies, video game metaverse economies, and smart home shopping devices. Each of these introduces new ways for us to interact and transact with each other and creates new areas for financial services to change how we spend, how we invest, and how we save. How will these changes unfold as Web 3.0 grows, and what might the future look like? These are the questions we'll be addressing today. Welcome, Oki-san and Jacqueline. It's a pleasure to be here with you today. I would like to start with a fundamental question to set the stage for our discussion. Now let's look at this in context of financial services. So Jacqueline, question for you. Now Web 3.0 sounds like a fairly complicated term to people like me. What is Web 3.0 in layman's terms?
That's a great question, Sandeep. Well, I mean, we have certainly come a long way from static web, which is very much a one-way display of information, to even interactive web, which is two-way, that allows for user-generated content, or even Web 3.0 that allows for machine actionable intelligence, that allows for machine intelligence to go through a whole host of data to make it more contextualized in terms of information and knowledge for us to take actions upon. So what does it mean for consumers, right? When you look at data as well as technology, it's no longer about making tasks more efficient. It has evolved to a whole ecosystem where every part of our lives are kind of like interconnected. And with the potential of data being decentralized, being able to simplify that day-to-day interaction as well as experience and making it more personalized. So when you ask Web 3.0 what it is for banks, like ourselves, it allows us probably greater connectivity due to the mobile connectivity out there, a greater understanding of consumer preferences. It also allows us to be able to innovate our products and services to keep up with the ever-changing consumer trends as well as life stages, to be able to hyper-personalize to the individual, and more importantly, promote greater collaboration with ecosystem partners. So that would be probably in a nutshell what our interpretation of Web 3.0 would be.
Well, thank you, Jacqueline. Now, Oki-san, a question for you. What makes the Web 3.0 technology markedly different than what Web 2.0 was?
Thank you, Sandeep. The first of all, in addition to what you introduced me, in addition to online brokerages, we operate the large crypto exchange business in Japan as well. So we are really heavily involved in those Web 0.3 kind of things. I think Web 0.3 is like, it's like a trusted network. It's a trusted internet. So the internet or the Web 2.0 is like a bulletin board on the road, on the station. It's just a kind of place. But the Web 3.0, it's a trusted, with blockchain technology, it's a trusted network. It's like an office. It's like an inside house. So it's very different from the Web 0.20 days. You can create businesses, you can create many things on the Web 3.0. So it's really, it looks like the same, but it's very different from Web 2.0 because because of blockchain, it can contain data and also it can protect. It can create a kind of trusted kind of space. So that is what Web 3 can do today now.
Thank you, Oki-san. Maybe that takes us to our next kind of a theme, which is mostly around Web 3.0 and decentralizing data ownership. So one of the core attributes that differentiates Web 3.0 from its predecessors has been this decentralization of data, which you both touched on. Now, it's a reversal of the way data is commonly stored and it's used now. We've seen manifestations of that in form of cryptocurrencies, smart contracts, which have just evolved into our real life. Now, Oki-san, the question for you would be, why is shifting the dynamics of data ownership so transformative for financial services? And what exact problems does it, solve for? And if there are any new challenges it brings, if you could highlight and also provide your insights on that, that would be awesome.
For example, like currently, when we trade stocks, there's many online brokerage companies like us, but at the end, we transact through stock exchange because all data are held in stock exchange and, related, companies around the stock exchange. So we have to go to the stock exchange. But in the Web 3.0, the data can be contained, in the kind of decentralized way. So we're not gonna need stock exchange. We can just P2P wise, we can just trade shares without stock exchange and just company to company or individual to individual. We can just exchange shares, and because data is inside this transaction, we don't have to go to the stock exchange. So this is a kind of one very vivid example what can be changed with this decentralization of the data ownership. And that similar thing can be done in the other transactions away from the capital market, away from stock market. Like if it's a banking or any places, all transactions can be done away from centralized authority. So that creates another problem as well, because it's done away from central authority, so that each transaction need to be verified by us, not by authority, but by us. When there will be some fraud or some other things could happen, that is a kind of challenge we are going to have. But as long as we take care of those kind of things, this move is quite efficient, away from the being away from the centralized kind of verifying power.
Interesting. Thank you so much, Oki-san. Now, decentralization of data, you touched that example. So cryptocurrencies, hot topic, but still not mainstream. Now, they are a fairly important, cultural shift which they are driving in financial services, where consumer is looking for control over money and financial data. And similar kind of control could actually happen where we are seeing a global rise in open banking and other large digital transformation across the industry. Now, Jacqueline, how do you see these trends, including this decentralization of data ownership, which is impacting our daily financial lives and is most likely going to change the way we invest and spend and save? What are your thoughts on that?
That's right. Sandeep, many say that the future of banking is open, right? Leveraging open banking to be able to facilitate consumers' daily transactional needs through to complex financial planning needs. And for the existence of an API marketplace, a platform-based ecosystem that allows for the access as well as the sharing of data across various parties, whether it's through consumers, with banks, as well as other parties for greater innovation. And we see open banking use cases around the world, right? You have PSD2 in Europe with the access and sharing of account information as well as transactional data. You see a lot of payment innovations by banks as well as third-party providers. And if you look at somewhere closer to home here in Singapore, we have launched our SG Findex, which is our financial data exchange, which is also the world's first digital infrastructure that leverages national digital identity, as well as a centralized consent registry that would allow consumers to pull their financial data across financial institutions or even government sectors as well as services. And like what we mentioned, right, ultimately the consumer has the control as well as the ownership of the data on when they decide to consent to share or when they withdraw. And for a consumer to have an overview of your finances across various financial institutions for better financial planning, whether it's for, like what you mentioned, savings, investing, transacting, or even safeguarding and protecting your assets. And what we've done at UOB is also leveraging that data as well as machine learning, as well as AI, as well as digital tools to be able to nudge customers for smarter savings or even transacting tips, or even using digital tools to be able to display the entire wealth holdings of our clients and simulate across different economic cycles in visualization dashboards, such that it contextualizes as well as personalizes the financial planning journey for our customers to make a more informed decision. But I think what's most exciting that is upcoming is really the cross-sector collaboration, whether it's with insurance companies or stocks exchange, or even a medical sector, where we can bring more customized value-added services, customer-centric solutions, create better operating efficiency, and more importantly, really, having an interoperable structure altogether. So it's an exciting space, really.
Well, Norman, you brought up a very good point around these integrations, interoperability. They all sound really good, and we've seen some examples, like you pointed out, where at least in Singapore, we are seeing integrations across platforms, across sectors, across devices. Now there is this integration which is Web 3.0 talks about, which is going to be integration between virtual and real life. An example of that would be your Amazon Home device, where you actually can speak into Alexa and talk to Amazon, and you can voice shop our grocery list. And actually, my kids have done that, by the way. I can tell you that. Got some cupcake, making machine, which arrived without our consent. So, but in the virtual world, gaming platforms are doing that, where Roblox is collaborating with offline companies like Gucci to create virtual fashion accessories for purchase. Now, in this new world, these digital interactions look very hyper-personalized, which you've touched on, and seamless. And they're influencing how we actually expect, from all of our tech experiences. Now, how do you anticipate this Web 3.0 will change consumer demands in the retail banking industry, and how can banks be ready to respond to that?
Yeah. What we've seen in the last 2 years, we saw a rapid adoption and a flight to digital. And rightly said, consumers' expectations of a more personalized experience, or even the demand of a seamless on to offline interaction. As such, it's imperative for banks like us to not only invest in digital innovation, but also to transform their physical interaction, whether it's leveraging data or innovation and technology to ensure that seamless on to off. And that's what we call omni-channel banking. The ability for us to be able to hyper-personalize the digital banking experience to the consumer based on his digital footprint, based on his transaction, based on his behavior. You can be that all-in-one banking app that allows customers to be able to manage their finances, bank, or even live their life, where it is really hyper-personalized to yourself using data, as well as a cognitive AI recognition engine to be able to recognize the last behavior. So for example, for me, right, I just got triggered for my Bloomberg subscription that actually took a hike. And I realized it's because, the introductory offer was over. So it gives me the power to take an action, whether do I cancel or do I continue. or even I got triggered for like a duplicate transaction on e-com. To some customers, it might be a fraud transaction. To me, it's just the same purchase of different colors. So it's really very much hyper-personalized to me. And when that kind of insight gets served to a consumer, what I do is I rate on whether I like it or I do not. And this is where the cognitive AI engine goes in and really understands that behavior to be able to prioritize what you see as your next best offer, your next best interaction. And more importantly, when we look at this, it's about putting banking, integrating into consumer lifestyles as well as partnership ecosystems, but also the other way, right? Not only banking into partnership ecosystems, but partnership services into banking. And that's what we call platform economics, being able to bring the two-sided market together to have a greater network effect for whether it's a financial or non-financial services. So it's a very exciting space, really.
Very good. Thank you. I don't know when I last went to the branch and wrote a check. So thank you for those insights around those hyper-personalized experiences. Oki-san, these tech integrations are also creating new kind of financial assets, new kind of markets are coming up. Somebody told me this example, which I've never seen, but actually I thought I would relate here. You could relate to it. Is you can actually convert a real Rolex watch into a virtual Rolex, sell it into a game, and then you deliver it in real life. How is this happening? What are these marketplaces doing to provide this kind of a experience, which is very different than the traditional ones? And what do these differences actually mean for the new age of consumers?
Well, so I think in this Web 3.0, as I said, it's a trusted network. So it's like you can create a new community in a cyber space. So it's like so we have nations. Physically, we have nations on the globe. Now we can have a different communities or different kind of cyber nations on the Web 3.0. And inside each kind of sub-economy, there is all kind of if it's NFT or virtual asset or those kind of things, people could make kind of value by gaming, and then use that value to buy something. And there's a kind of, one economy there. But that is like, as I said, it's like a nation. So nation by nation, rule is different, and the way to do is different. So there are whole kinds of different kind of the way of doing business, and then all kind of things in each different cyber nation, which is created by this trusted network, Web 3.0. So I think for consumers, you have to know what is the rule in that economy, sub-economy or nation, and that can be very different. And also, all those each kind of new cyber nation or cyber new economy is that really governed by the government. So the rules can be different from the rules and the rules can be very different from another community. So that kind of thing is happening. So that is in a sense very exciting, but in a sense you really need to know the rule of that community. So that makes that could create potential kind of programs going forward.
Well, thank you, Oki-san. Now we looked at these examples of Web 3.0 was introducing things like smart contracts, but you would also think that it could probably design, like we touched on, Oki-san and Jacqueline, about designing new social contracts. So if you look at this Web 3.0, Web 3.0 actually is calling for a reevaluation for many of our social contracts which have governed the Web 2.0. This includes how societies and companies will use the consumer data, as well as ensuring the next digital world doesn't widen the digital economic inequality, which we have seen in the last couple of years. And these new financial markets are provided and protected. So Oki-san, will Web 3.0 have an impact on this digital and economic inequality in your view? And then in what way, and then what needs to be done so that we ensure that there is more inclusivity?
Well, it's short answer is yes. It will create inequality, for sure. And but as we know in our current world, there are different nations, and there is a different currency used in each nation, and there is a foreign exchange, between nations, right? So there are kind of an exchange rate or the way to exchange in between those different community or different nations. So that kind of a mechanism is going to be needed, I think, because there are people who can who can benefit from this Web 3.0, and there are people who cannot use or who cannot benefit from Web 3.0. So there is inequality there. And in between those community, so you make money, you make value in one community by doing something under the rule of that community. But that value, how can that be swapped or interoperated to the another community? Is someone needs to create a kind of exchange mechanism. I think that comes to like old hub and spoke kind of the model. We might need a CBDC, or we might need a stable coin. We might need some sort of thing to, how do you say, to try to make equality between different communities. And also, there are people who left out of those new economy. So we need to somehow create efforts to include those people. So, Web 3.0 is a beautiful thing, but unless it simultaneously solve those inequality or inclusion issues, it can't. I don't think it can get the wide support from from the society. So I think that is a challenge for the Web 3.0.
Jacqueline, turning over to you, as Web 3.0 brings in this world of digital transactions, new financial products, do you anticipate the way some of these regulated financial services, like lending, just the way they operate, will they have to change? And then, what way do you see them changing?
I mean, it's a very interesting space within lending, especially with credit. And we do see an increasing use of alternate data to do next-gen credit scoring. And that's naturally so, right? With the explosion of digital interfaces with consumers, as well as potentially lower costs of computing power, as well as the storage of data. But with the machine learning AI, as well as leveraging and techniques to be able to leverage big data or third-party data, whether it is, for example, telecommunication, e-commerce, social platforms, your digital footprint, or even your geolocation data, to be able to underwrite credit for the new to credit of, let's say, the underserved or underbanked segment, which provides more financial inclusion and the ability to be able to do digital lending through digital platforms. Having said that, I think there needs to be governance around the usage of this. So, for example, the increasing consideration of consumers in consumer data protection overall and privacy. So there needs to be safeguard measures around consumer data protection. And when data is being held by whether it's users or even processors, there needs to be a structure of governance to ensure the collection, the storage, the protection, the usage of the transiting of data to be protected. So that's one within the regulatory space. The other one with the emerging of a lot of the digital lending platforms, I think it's also imperative that there is a regulatory governance structure of the overall unsecured lending exposure to individuals, so as we avoid unintended consequences within the economy. So while it's an exciting space, using a lot of alternate data to be able to underwrite, to provide greater financial inclusion, I think the importance of data protection and privacy, as well as looking at the overall unsecured lending exposure of individuals, is critical.
Well, thank you, Jacqueline. That brings us to our final set of questions, which is mostly around innovating financial services for the Web 3.0 future. So as you could see, we have a lot of financial services innovators in the room, and Web 3.0 unlocks a whole new world of opportunities for them and us on this panel. Jacqueline, do you see Web 3.0 changing the nature of how financial services innovates, and in what way do you see those?
Yeah, that's a great question. I mean, for financial services sector, I think there is overall increasing need for us to look at the entire journey. So where retail products and services get created, and where financial services can be availed, embedding really banking as well as finance into consumer 360 lifestyle ecosystem. So if we look at retailers that create and innovate products, right, that integrate with home devices or even virtual platforms, it's important for financial institutions to also start thinking or continue, rethinking and relooking at how we can provide financial services in a seamless manner, especially with the convergence of key technologies such as augmented or virtual reality, 5G network, or Internet of Things, or AI, and many other, to ensure that we have a more personalized as well as contextualized banking relationship with our clients.
Thank you. Now, Oki-san, do you have any advice for the innovators in this room in terms of what kind of financial services are ready for change, and how do you imagine and create these new solutions which capture this Web 3.0 and the potential of that?
Well, decentralization is really happening. So any incumbent centralized way of doing business can be completely disrupted. So I'm sorry, Jacqueline, but the bank is, I don't know how the future for the commercial banks or even for central banks.
Yeah.
It's going to be very different. So for the innovators, anything the central bank or large commercial bank are doing today can be completely disrupted, can be completely changed. So there will be a lot of spaces for innovators to get in and they recreate the new way of running economy. That is most exciting place, I think.
Completely agree with you, Oki-san. I mean, honestly, whether it's banks or whether it is ecosystem players, fintechs that's constantly disrupting, innovating, and really transforming, it's important that, all of us don't rest on our laurels, right? And really, keep up with the ever-changing technologies as well as consumer trends to be able to serve our customers better. So you're right, you're spot on. We all cannot rest on our laurels.
Yep.
Well, it sounds amazing. Really excited to see what it comes, in the next 5 to 10 years. And thank you, Jacqueline. Thank you, Oki-san, for sharing your insights. Thank you, everyone who joined today's session. We look forward to interacting with you throughout the Singapore FinTech Festival. Thank you once again.
Thank you.
Thank you, Sandeep.
Thanks so much, Sandeep, for leading the discussion with Oki and Jacqueline.